Hey, Amy, how's it going?
It's going really well. How are you?
Doing good. So, Amy, we're releasing this podcast on May 29th. Do you know what holiday that is?
Well, I do because I read our notes. So May 29th is National 529 Day.
Yeah, that's right. So, today we're going to be diving into college savings and planning and how you think about that, and specifically around 529. So, stay tuned.
Welcome to Operation Retirement Readiness, where Amy and Mike, two certified financial planners, talk about how military members can prepare for transition and how veterans can prepare for ultimate retirement. This podcast represents the views of the hosts and any guest. It is for informational purposes only and should not be considered tax, financial, or legal advice. All information is regarded to be from reliable sources. The hosts are not responsible for any losses, damages, or liabilities that may arise from the use of this podcast. This podcast is not intended to replace professional advice.
So we're recording this in late April, and as I said, we're going to talk about 529s, but just wanted to kind of talk a little bit, first of all, about student loans. Lots of things going on with the new administration, some court cases challenging student loan repayment plans that are out there. So lots of unknowns right now. Uh, it's really a ever moving situation, and so we're not going to dive too much into that today, just because there isn't a lot of actionable information right now with so much in flux. But we'll probably do a show in the future once some of that becomes more clear, and we can actually talk about it with some level of certainty. But the other thing that came out recently was the number of folks that are in default for student loans. Had all the pauses that went on with the COVID pandemic, and that extended and kept getting extended. But late last year, or actually, toward the end of last year, payments resumed, and now folks are hitting that 9 month period where they're starting to be in default if they haven't made payments. And so the new administration announced that they are going to start collecting and referring some of those defaults. But currently, it's over 5 million people are in default on student loans. So again, not a good situation, and there's several more million that are just short of being truly in default. So the administration has announced that starting May 5th they are going to look at wage garnishment and referring things to the Treasury. So if you're supposed to get a tax return, your tax refund, that's going to get stripped away to pay for your student loans if they're in default. So just be aware of that. Hopefully none of you are in that situation, but make sure if you are, you're talking to your payment processor and seeing what options you have going forward. So um, that's really what I had. Any other thoughts on student loan stuff? I know that's not really our topic today, but I just wanted to kind of hit that since we're talking education and college.
Yeah, I mean, it's worth mentioning because I know that people have a lot of questions, but to your point, we don't have a lot of actionable information, but I think this one will definitely be on the docket for later on when we have more clarity.
All right. So yeah, you
So,
want to kick us off?
yeah, yeah. So, we've talked before. We've talked before about education. We've got actually we covered 529s in some detail last year around this time. We've also talked about post 9/11. College is expensive. It's one of the biggest goals that people are saving for beyond retirement. In some cases, it's bigger than a house payment. Not always, but sometimes. Um, so it's very important. This is something that families struggle with, and it's important enough to talk about again. So we have some questions lined up that people typically come to us with. And Mike, to kick us off, the first question is the most obvious one to start with. How can families determine the right amount to save for their child's education?
So this is difficult. You're talking about if you're starting early, which is always the best when you're having to save for a big expense. you could be 18, 15 years from that actual goal. And, or is the kid even going to go to college? So lots of challenge. It's both art and science. College is steadily increasing in cost, as we've talked about before. But this year, I think we're for next year, we're seeing the first couple schools that are over $100,000 cost of attendance, all in per year. So, I mean, that's just astronomical. $400,000, if they get done in 4 years, if they're not getting any kind of aid. So. Um, it can vary greatly. So, you know, a lot of times it's just start saving. What do you have that you can put away? Start doing that, and then as you get more clarity on, what the kids like, what their goals might be, then you can really dial into how much do you need. Um, but there's lots of different things like, I got lucky. I only have one daughter, and, had the GI Bill that I could transfer. And, we've talked about the GI Bill stuff before, but I didn't really have to save a lot because that's going to, basically provide her undergraduate education. And I know you've got two kids, so, one GI Bill, and so, you're in the, okay, how do we divvy this up? So probably paying for at least part of one kid's school. And so again, it's understanding what your resources are. Is it a GI Bill? But if you have multiple kids, okay, that may take care of one of them. Still going to have to save some for the others. And the other, art piece of this is the schools have very different funding models. So some of them are going to give out, merit scholarships based on the kids' grades. Others are fully just based on the need and that the family has. So, and that can change drastically depending if you're still in the service when your child's going to school. You may qualify for more aid because you're getting a bunch of tax advantaged income, BAH, BAS, and so that doesn't show up through the FAFSA to the schools. So it looks like you're making less than you really are, which is great because you qualify for more aid. If you're retired and you've got a pension coming in, you're working a second job, maybe the spouse is also working, you're probably earning, a significant amount of money, and you're not going to qualify for that much need-based aid. So it really is, a hard thing to do 15 to 18 years before you're going to need the money. So, it just makes sense to start saving some, even if you base it on, okay, I'm going to save to target being able to pay for a state school. That could be a good target to start with, and just, making the continued investment and savings to try to meet that goal, and then adjusting as you get closer and see what, that actually looks like. Anything you want to add that I missed or anything, or clarify?
No, I mean, no, I mean it's such a complex thing, and people have a hard time, and we're talking specifically about 529s later on, um, and to your point, like just start saving. I think sometimes people try think about under saving because they feel like the 529 isn't flexible enough. I actually am okay with, saving maybe even a little bit more than you think you need to, because it is so much more flexible than it was to begin with. But you're right. You're absolutely right, Mike. I mean, it just is a moving target, but it's better to start than to wait and then be surprised and not have enough time to catch up.
So again, once you kind of set that target, we're talking 529s. What are some of the tax advantages of saving into a 529?
Yeah, so I think about 529 accounts as almost like it's, to a degree, it can be like a brokerage account, that you don't pay any taxes on unless and until you take a distribution that's not qualified. And so, and that's goes back to the flexibility we were just talking about. So several tax benefits. At the state level, depends on your state, which, state of residence. Sometimes contributions can be made and deducted on your state taxes. At the federal level, no deduction there, but your earnings still grow tax free. So, like I said, it's like a brokerage account that you don't pay any taxes on unless and until you take withdrawals. If you use the withdrawals for qualified education expenses, then they're tax free. So you don't pay any tax at all, even on the growth. And then, one of the things that we were just talking about, like, how do you know how much to save? If you kind of overshoot things a little bit and you have post 9/11 GI Bill, there's ways that you can take the money out. It's not a qualified expense, but you're not subject to the penalty because you can offset what you received for GI Bill aid. And that, again, that's why I call it sort of like a brokerage account. So you will pay taxes on that growth, but you're not going to pay the penalty, and you didn't have to pay tax on the growth as you went along, on the dividends and things. Does that make sense, Mike?
It does. It does. Yeah. No, that's great clarification there. And yeah, I was just talking to a client the other day, and they're moving to Arkansas. And Arkansas, 10,000, they can contribute $10,000 a year as a couple into 529s, and that'll be a state tax deduction. So, it definitely varies. Some states don't have income tax, so you're probably not going to get a deduction there. But states that do sometimes have pretty generous, savings for college.
Yeah. And I mean, some of them are very generous. Like, I think West Virginia, South Carolina, I don't even think they have a limit on how much you can deduct. You can deduct, whatever you contribute for the child. Uh, so we've talked about, tax advantage, kind of how to figure out how much. Qualified expenses. What are the things that you can use the 529 to fund besides tuition? So tuition, is it what else can you use? Room and board, books, things like that?
Yeah, you can. It's pretty wide open for the 529 fund. So, like you said, tuition, room and board, books, supplies, and even sometimes certain technology can be, taken out for that, like laptops and things like that. So, it's important to understand the specific guidelines, and before you're taking money out, if it's not one of the real standard things. But it's pretty broad, and sometimes you kind of got to sort through, especially if you're qualifying for some of the tax credits. Those are typically more specific. Usually that's around uh, the tuition, maybe fees, sometimes books. So, there are various things when you're actually paying for college, these strategies of when you use, what dollars for what specific expense, and what's allowable and things like that. So, make sure you're doing your homework. The other thing you can't do is, if you are taking the tax credit and using $529, you can't use the $529 to qualify for the tax credit at the same, using those same dollars, because that's kind of double dipping. You're already getting the tax advantage of the 529, so they don't want to give you the credit based on that. So again, when you're actually coming up with the bill paying strategy, probably right about now, if they're a senior in high school, and kind of drafting that 4-year plan, take all this into account. When do you use, the 529 versus when, making sure you qualify for a tax credit or some other, GI Bill. How do you stagger all that to make sure you're getting the best bang for your buck? So, anything else on that?
No. I mean, I think you made a really good point, in terms of understanding the difference. So not just what the 529 can cover, but what credits. So if you fall in that income bracket and you can take advantage of any of the credits, the education credits, understanding what those credits can be used to fund, and the fact that you can't cover the same bill with a credit and 529 money. You can stack it together, but you can't, so if you're going to get a whole 4,000 of the American Opportunity Tax Credit, and there's nothing else, then you couldn't use 529 plan money that year for qualified expenses. But most people are paying more than $5,000 or $4,000. So there's there's other options for that 529 money.
No, exactly. So you alluded to it, but I think the number one concern that folks have when they're like thinking about saving for college, especially in the 529, is, well, what happens to my funds if junior doesn't go to school? What are my options? Do I just, did they keep the money, or what can I do with it if they don't go to school?
Yeah, and this is a big question, and I think that it was right to worry about this when 529 accounts were pretty new, but they've become so flexible at this point, that there's tons of options at this point. So if you've started saving for your child, they decide not to attend college, there's plenty of other options. First, one option is that you can change the beneficiary to another eligible family member. So it could be you, it could be your spouse, it could be a sibling, it could be a niece or a nephew that you have. You can withdraw the funds. Again, the if you make a withdrawal and you don't have any way to kind of offset or an exemption to the penalty, you're going to pay 10% penalty on the earnings plus tax on the earnings. And I'll also note here, if you were able to get a state tax deduction, there's a good chance you're also going to have to recapture that deduction at the state level too. The other ways that are in play for 529s at this point, depending on whether you meet the criteria, you can roll funds from a 529 to a Roth IRA now. And just quickly going back to other eligible family members, you don't have to use it for the child. You could use it for the grandchild. So if your children have kids and you've got leftover money, you can keep it and use it for grandchildren's education. And when you think about the amount of time you may have accumulated that money, that's really powerful for the grandchild's education. What I miss, Mike, I feel like there's so many different ways to use 529 money now.
Yeah, I think you hit some of it earlier, but if they get a scholarship, um, you'll pay the tax on the earnings, but you've had tax-free growth for many years that can help. But yes, you'll pay that. You won't pay the 10% penalty. Uh, I think you hit the big ones. The Roth piece is the newest twist that came out with I think Secure 2.0, one of the Secure changes, and so that's nice. Some requirements there. You got to have the account open for like 15 years and when the money went in and things like that. But it's still a great option, and that would be for the beneficiary. So you could, if they didn't use it for college, you can get them started, get your kids started off on the right foot with the ability to, fund their Roth IRA. So that's a good option, and yeah, lots of things. I definitely encourage folks to consider saving in a 529 if they if there's any kind of remote possibility that they're going to need it for college. It's a good vehicle to do that. So yeah, I think you hit those things.
Okay. So another question is, so we talked about grandparents a little bit. I know that there are grandparents that specifically want to save, and other relatives. I actually have always contributed to my nieces and nephews' 529s as gifts for them. So walk us through how people can do that if they want to.
Sure. So there's really two ways. If the parents have a 529 already established, like you said, and you make gifts, you give it to the parents, say, hey, this should go in there, the kids' 529s. That's one way. It's still owned by you as the parent. Um, the other option is the grandparents could just create their own 529 and designate the grandchild as the beneficiary. A little bit of a benefit with that because, um, and this is also a recent change with the new FAFSA Simplification Act that happened the other year, is it used to be that if income came in, it kind of would get counted against the student. If it came from the grandparent, that would get reflected. That's no longer the case. So the grandparent can have that 529. They could pay for all of college and it wouldn't show up on the financial aid forms, and it may allow the student to qualify for more aid. So options around that going forward, and a good way to save if the grandparents are considering that. And good thing is, a lot of times there's multiple grandchildren, so they run less into the concern of, okay, I only got two kids. So the grandparents may have multiple grandkids, so there's kind of even less of a worry of that not getting used eventually, while a parent may only have two, three kids. If they are multiple siblings and then they have multiple sets of kids, you end up with 8, 10 grandkids that now that 529 can be used for any of them. So it could be a good option for saving. Any other
Yeah,
thoughts on
and
that?
well, I would just say that, for those living in states with a state income tax who also offer a deduction for contributions, these also usually, in fact, I haven't encountered a state that doesn't allow it for a grandparent contributing. So there's a potential for quite a bit of tax savings for grandparents living in high tax states. So,
Yeah, that's a great point.
um, No, Mike, one other thing. I mean, I thought maybe that would be our last question, but I keep running into this question a couple times, as I go along, and I've got clients who are just having babies and things now. So how do you pick a 529 plan? There's a whole bunch of different ones. How do you pick one?
Yeah, that's a great question. So the first thing I definitely look at is, again, at least consider your state plan if there is some tax advantage with that. Um, the plans vary. I think most of them are slowly improving. It used to be that some states, the choices weren't very good and they were really expensive, with fees and the management fees on the investments. So, you know, if you have a plan that looks expensive compared to, maybe you look at a couple other different plans, um, and compare, make sure that the tax advantage is still worth it compared to what you're going to end up paying. So that would be the first criteria. If you're in a state that doesn't offer any kind of tax break because, there is no income tax or they just don't, um, lots of options. You can use any state's plan, and you can also, most brokerage accounts like your Fidelities, your Vanguards, your Schwabs all have their own 529. So at that point, you really want to look at, what are the fees and, what are the investments like that, you be able to use within there, because you don't want to be paying more than you need to. And but like I said, a lot of them have you know, come around. They offer index funds, which are relatively low expenses, and allow you to pick and find one that's good. And if you Google online best 529 plan, there's going to be numerous sites that come up and say, oh, here's our ranking 1 to 50 of all the plans and stuff. And So I'd look at a couple of those and just see what, you know, if there's somewhat of a consensus, maybe, oh, these are all within the top five. Maybe you start looking there and just seeing what could be. So, any other thoughts
Yeah.
on that or what you recommend?
Yeah, no, I agree with everything you said. I'll just add to that, for those who still have a DoD ID number, so active duty, reserves, retirees. If you have a DoD ID number, you can get into the MWR library online and log in, and you actually have access to the Morningstar 529 Center. So you get into the Morningstar Access Center or Investor Center, and then on the left-hand side, you can go to the 529 Plan Center, and there's a ton of information in there. You can compare all the different investment options, get Morningstar's kind of feedback, and then, Mike, to your point, plenty of good websites out there that give their take on things as well. But start with your state plan if you have an income tax and if you get a deduction for it, or some other advantage. And then if you don't, then go looking for the best plan that suits your needs.
Yeah, that Morningstar, that's a great tip. I forgot about that. But yeah, that's a good thing that, like you said, you have advantage. You should take advantage of if you still have access to that.
Yep. Yep. Well, Mike, I think that hits everything. We hope that you understand your 529 options better, understand how the plans work and how valuable they can be in your college savings. Thanks for tuning in, and we'll see you next time.
All right. Take care, Amy.
Take care, Mike.
To get transcripts, show notes, or more information, go to operationretirementreadiness.com. Have a question or topic for the podcast? Send it to info@operationretirementreadiness.com. Find out more about Amy and Mike at their websites. Mike is the founder of Next Mission Financial Planning, LLC. He retired from the U.S. Air Force and has worked in the financial services sector since 2021. He is a certified financial planner, chartered financial consultant, and a certified college financial consultant. You can find out more about Mike at nextmissionfinancialplanning.com. Amy is the founder of Instar Financial Planning, LLC. She is retired from the U.S. Army and has worked in the financial services sector since 2019. She's a certified financial planner, a chartered federal employee benefits counselor, and a chartered retirement planning counselor. You can find out more about Amy at instarfp.com.